Welcome to the Bill Walton Show, featuring conversations with leaders, entrepreneurs, artists, and thinkers. Fresh perspectives on money, culture, politics, and human flourishing. Interesting people, interesting things.
Hi, welcome to the Bill Walton Show. I'm Bill Walton, and today we're going to have a conversation with some of the members of our team: Frank Wasiter, Alona Wasiter, Greg Columbus, Rich McFadden. If Rich shows up, Rich is a little late. He's always a little late, but we'll hopefully he'll join us because he always has interesting things to say. And today we're looking to find out what's really going on with GameStop and with Reddit and with the struggle of good versus evil and with short sellers on Wall Street. And Frank, what did I mention? Greg Columbus. There you are.
You did mention me. You forgot Brian.
Forgot Brian McNichol. All right. Well, guys, I'm just learning how to do this 5-way. So, Frank, you've been following this closely. What could you give us an overview about what's happening here? Because this is in real time.
Yeah. So, essentially back in July, some of these Redditors, these guys like deep in like the video game community, kind of figured out that there was some weird stuff going on with GameStop. There's a video going back to it where they put together this nice big detailed thesis and said essentially, there is more shorts, meaning like, more borrowed shares to be sold than there are available shares of this company on the market. So sooner or later, this is going to go sideways. And, if we just invest in it, we'll make money out of it. So they start this process in July, and then things kind of, start to explode by January. And then all of a sudden it kind of comes out that, as it turns out, one of the biggest investors was Melvin Capital that was shorting the stock. And within a couple of days, it just comes out that they've lost like $2.9 billion. They got to go to Citadel, which they had a relationship with to get more capital because, they only had about 12.5 billion. So they're looking at losing a quarter of their whole net worth. And then this leads to news coverage. More people jump on it. So the stock price, rockets from about a $5 point to at some point about $420. And at the end of it, Melvin's losing, $6 billion on a bad bet. And it just creates all this chaos. So it came out that, that Citadel had been buying user data from Robinhood, and Robinhood had branded themselves as democratizing finance. And so throughout this
Robinhood's an online broker, and you can trade through them without paying a fee.
Right. Correct. Their big thing is commission-free trades, and you can buy fractional, like pieces of shares. So they have this PR nightmare because them and a bunch of other brokerage all of a sudden, have a fear that they can't cover this tremendous amount of volume of people buying up GameStop. And as a result, they have to lock down and restrict buying and selling. So they said for a period of days, you can only sell, you can't buy anything. And then afterwards they say, well, you can buy, but you can only have one share. You can only have 5 shares. And throughout all of this, there's this, you see this big, massive media campaign saying, how bad, Reddit is, and they're, trying to ruin the market. And, they're a bunch of degenerates. They're doing all these, nefarious things. And, meanwhile, Reddit, like Financial Times even comes out and says, oh, the Redditors are a bunch of alt-right, white supremacist guys. And then the Reddit guys called him out on it. And then so Financial Times has a disclaimer on that article where they had to retract it because they had zero basis whatsoever for saying that. And then you see just this glorious amount, like Elon Musk coming out and tweeting about it. You see Shamatha Palihapitiya, which is a venture capitalist out of California who wants to run for governor there, or seeded that he wants to run for governor there.
Yeah, we hope he does.
Yeah, he's my superhero. He had a great interview with CNBC where he's just, CNBC's towing the line of Melvin Capital and Citadel over there. And Shamatha saying, it's totally hypocritical for you to say that, what the Redditors are doing is bad when we all know that, these guys have idea dinners and things like that where they get together. And so you see what starts as a big, massive misinformation campaign.
Well, there's the underlying reality. Well, there in Wall Street, there really is no underlying reality. It depends on sort of where you are. What you think is true depends on where you sit, and that's the reality of Wall Street. But let's to just amplify a bit. Reddit is an online app, and they've got subgroups in Reddit. I just found this out. I joined, and the subgroup that's focused on this stock or this group of stocks is called Wall Street Bets.
Right.
Yep.
And there were a couple 100,000 people in it. And now in the last 6 months, it's grown to 2.5 million.
It's up to 8.2 million now.
Okay.
It's like they got like 2 million people in the past like 24 hours.
Whoa.
Brian, what do you've done some?
Well, yeah, you were talking about, the reaction. The thing that has caught my attention is the reaction from, the society at large, the media, and so forth. And like you're searching for bad guys here. And the media is standing up for, big institutional investors against young rebels, and I'm not sure either of those images work. I guess they, obviously there are some institutional investors on one side of this are the ones taking the bath. But as you said, Frank, there's, the characterization of who the people profiting from this right now are, it has been, they just basically made up bad stuff to say about people. There's a guy on, I guess, CNBC yesterday, or no, MSNBC, saying these are guys who sit in their basement playing video games and they should go out and get girlfriends and lead productive lives, and it's like, they're participating
How do
in the
they know
market.
how do they know it's not the girlfriends doing the trading?
That's right. I mean,
That's
yeah, the first thing is like this guy just acted as if it was all guys and, no women took part in this, it's the like characterizations were ridiculous.
Well, let me provide a little context, and then I want to hear Greg and Alona's points of view. Context is this: this strategy of shorting public companies has been around for decades, and it's been a specialty of a subset of hedge funds. Hedge funds have got all sorts of different trading strategies: long, short, short only, et cetera. And they're momentum traders, they're and so on and so forth. So there's Rich McFadden. Hey, Rich, I'm glad you got up.
Hey, I'm here for you, man.
Okay. Hey, we need you. Anyway, so this has been around for years, and the short way to describe it is there's a strategy called short and distort, which is where you take a position in a stock and then you get out and tell a story that makes it sound much worse than it is. And the hedge funds have been very good at picking companies that have sort of weaknesses, whether they're regulated by the financial regulators, or in the case of biotech companies, by the FC or the FDA, where there's a complex company, hard to understand and easy to distort the true picture. Well, in the case of GameStop, it was a bricks and mortar retailer of computer games. And Frank, you guys know a lot more about this than I do, but it wasn't really going anywhere, and they got to figure out what to do with 5,500 locations, 6,000 locations. It's not a growth business on paper. And then, so this was one of the targets. And then another target was AMC Theaters. And we all know the theaters have been dark for 6 months because of the pandemic lockdowns. And so the hedge funds have been good at targeting this. And what I think most people don't know is that 25 years ago, in 1996, there were twice as many public companies traded as there are now. There are roughly 7,500 and almost 8,000 companies. And that now number has dwindled to about 3,400. And part of the reason it's the complex regulatory environment that the public companies are in, and it's expensive to be public. But also the small and mid-cap companies are incredibly vulnerable to somebody taking a big position in the stock and either driving it down or that's more often the case. Sometimes they try to drive it up. And they did this with impunity for, the last 20 years or so. And now all of a sudden on the internet, in Reddit, in this team of, what are we calling ourselves? Wall Street Bets. There were a group of small investors that decide, well, we're going to take the other side of the trade. And by the way, we can all communicate with each other. The hedge funds do their dinners where they exchange ideas, and they do a lot more than that. They collaborate on who's going to do what, when. But now the little guy's doing that. And the hedge funds are like a $3 trillion segment of the market. And the hedge funds have become very ensconced. They're part of the establishment now. And in fact, there's this notion of regulatory capture where if you're regulated by an agency in DC, the industry works to get the regulator, on their side. And I think hedge funds have largely done that with the SEC. And so the environment's such that
regulation, right?
Yeah, and they're cruising along. They're cruising along, making money. They're taking stocks out via short selling year after year, and now we got this new thing, and I think it's terrific.
What's the danger there, Bill? What could this new scenario of these Robin Hoods running around fighting the big guy? What kind of chaos could they create because they don't maybe know the system as well as the big guys that are manipulating it every day?
Well, I think the thing that's happened in the last 5 years, 10 years, certainly the last few years, is that the information advantage that hedge funds and institutional traders had has virtually disappeared. With the internet and 24/7 communication, chat boards, things like that, it's the edge that you might have had, when I was on Wall Street in the 70s and 80s and part of the 90s, it's a totally different landscape. So these people, if you go onto the Reddit site, you see a lot of these people writing very thoughtful papers about what this company is really worth and what it isn't worth. So that's a good thing. That means you got more people in the market deciding what things are worth. And that the bad thing is, if you're one of these smaller traders, is that you're putting your own net worth at stake. You could lose all your money playing this game. But I think they know that. I mean, the chat on Reddit is great fun. I mean, Frank, you want to give us some chat on some example of dialogue on Reddit?
So, this makes it a little bit easy for, mainstream media to kind of villainize them, but there's a very unique culture that goes on it's very deeply steeped in video games, where it's funny to be stupid or to do, dumb things. So it's incredibly, quote unquote, vulgar. So they'll refer to themselves constantly as dumb, retarded, autistic apes. So it's hilarious to be autistic, meaning that they're obsessing, over something to a point, well beyond what's reasonable. And, the whole idea at this point is that it's not even about making money for a lot of them. It's like, yeah, okay, if we made a little bit, it's fine. But they're saying, we got diamond hands. We're gonna hold it until the stock reaches 10,000 in price. And my favorite quote of all time is one Redditor comes back and says, Melvin Capital's learning not to fuck with weaponized autism. And so like, this is the humor. This is the, this is like I said, it's incredibly vulgar. It's incredibly, it's off the wall. And if you're not part of the culture, it's why is it cool to refer to yourself as these people? But this is a segment, a millennial group segment that mostly grew up playing video games together and is used to getting together in a group of strangers playing World of Warcraft or, online games and doing coordination amongst, 40, 50, 100 strangers, like it's no big deal. Like we're just going to do it. And it's like getting together and playing baseball.
That makes him a very worthy adversary of the hedge funds.
Yeah.
Greg, got a thought?
Yeah.
A couple of thoughts here. First of all, interesting bedfellows on the reaction to this. I mean, Elizabeth Warren, who has been hating Wall Street and the big banks, all of a sudden talks about the need for regulation. And all of a sudden, she's not on the side of the little guy anymore. But you got the Shark Tank guys like Kevin O'Leary and Mark Cuban out there cheering him on all the way. Dave Portnoy of Barstool, who's putting together the Small Business Relief Fund, thinks it's a great thing. But before we all cheer the storming of the Bastille here, Bill, you've been on the institutional side before. And while I'm sure you don't like a lot of the regulations, they do provide guardrails of what you can expect. So if you were still really actively in the game and in that business, how would you have reacted to all of these people coming in and trying to uproot the market like that?
Well, I think I was in the private equity world, so I wasn't as much involved in the day-to-day trading. Thank goodness. That's a incredibly tough game. I think back then and even now, I'd welcome more people coming into the market. I think the risk here, Greg, Rich, to your question, the risk is that we get a regulatory overreaction. And we've had time after time after time, we've had regulatory overreactions. And the first time we had, first round, we had Sarbanes-Oxley. And then later on, after the 2008, 2009 meltdown, we had Dodd-Frank. And, what that's done to the capital markets is as the guys that run these big organizations, like Jamie Dimon will say at JP Morgan, says, the regulation has created a moat around our business model and the capital needed and the regulation that you're going to have to put up with. To start a small bank, you're going to have to fill a stack of forms out that run about 3 or 4 feet high, and you're going to need more capital than ever. So it's really shut down new entrants into the traditional banking businesses. But then what's happened, and that relates to what's happening with Reddit, is we got a lot of fintech companies, a lot of companies that are operating outside of that, and they're doing a lot of innovative things, which I think is all good. I think the benefits of the small investor coming in with eyes open, and if you read what they're saying, they're not buying. There's no veil of pink. They're not wearing pink rose-colored glasses. I guess that was the word, if I could date myself. They see what they're doing, and they like taking them on. So I don't. The risk is a regulatory overreaction, I think the thing that's interesting is there seems to be a political aspect to this, where you've got the you've got the hedge funds, and the hedge funds I think are now part of the establishment. Remember, the 10 largest hedge funds, if you ran one of those, the guy or gal, I think they're all men, was making the least amount of money last year, was paid $377 million. And to be in the top 5, you were making $750 million a year. And so with that kind of money, you can guarantee that they're using it to buy political influence, to make sure that the regulators see their model in the same way. They can hire the very best lawyers, PR firms. And so I was kidding with Frank on the way. I guess that technically I could be a member of this elite, but I'm kind of loving seeing the elite being gored here, because
I think you should join the Reddit group. I think that would be amazing.
I did. I don't know. You did.
Oh, good.
I did. I joined this morning.
Oh, good. That's awesome. I love it. I love the thing that I love about all of this is the same people who hated Trump are the people who are like, yay, the little guy, where Trump was all about the little guy and fighting the establishment. And I want people to wake up and understand that they hated Trump for the reason that they love what's going on now. And there's the disconnect there boggles my mind. I just don't get that.
Yeah. On top of that, okay, you think about all the things that like Facebook and Twitter did to Trump while he was in office. What they were trying to do is get regulated. They were trying to bring on a regulatory environment over them. So because, that would create barriers to entry, you have Parler and all these things. They're like racing around trying to keep any of that from getting caught up, because if they can get their regulatory regime in place before a rival comes up, a rival won't be able to come up.
Let me tie that into tie that in with the ratings on Google for which our company here are
Robinhood.
Robinhood. The ratings on Google for Robinhood, and they went from 5 stars to 1 star. And the reason that happened was,
of course,
was that they stopped trading. They said, look, you can sell, but you can't buy. And so that's not exactly being a market maker. And all the small investors came on Google and started rating them, and they went from 5 to 1 in a heartbeat. And then Google came in and intervened and erased all the negative reviews. Now, what was that?
They don't want to be looking like they're picking winners and losers.
Well,
I mean, we all know, they're willing to do charades that we all realize are charades. They have no compunction about that.
Well, they used to say you're not paranoid. They really are trying to come after you.
Yeah,
I mean,
that's right.
It feels a little bit like that. I don't know how Google felt like they needed to intervene here, because in defense of what Robinhood had to do, there is a potentially good outcome here. The stock markets have a very still antiquated trading system based on the way things were done in 1920 or 50 or 60, where you get a 2-day settlement, and there's lots of capital involved in being a middleman in this world. And so Robinhood really did need a couple $2 billion that it didn't have, and they could either stop trading or they could go out of business. And so what they did.
So it wasn't the man coming down telling them to stop this and it wasn't the hedge funds telling them to stop it. It was a monetary reason. Their bank account was short and they couldn't do the payouts.
That's the putting the best light on it. That's the reason. Yeah. Now that's not, if you go onto Reddit, that isn't what they think.
Right.
Yeah.
That's the story I had heard, is that the hedge funds came in and said, you've got to shut this down.
Well, I think they may have, because the hedge funds may be invested in some of the venture funds this is all very incestuous, guys. I mean, they all own the same stuff. And
if you start like doing the connections, it's crazy.
Yeah.
You got some people that are long on it, short on it. Like it's on the one hand, they lost all this money. And then on the other hand, it's like, GameStop is still owned 86% by institutions.
Bill, why is shorting the market even legal? Explain why that's allowed. I don't understand that.
Well, I think it's a good thing ultimately, because it allows you, if you believe the market functions to set prices and you want to get an efficient way to figure out what something's worth, being able to buy it only it sends one signal. But if you can go in and you can sell it by borrowing somebody else's stock, which is how the short selling works.
Right.
Although sometimes there's something called naked short selling, where you sell it short, but you don't even have the borrowed stock, which is illegal.
How is that even possible?
Well, do we have a couple hours? It's complicated, but it's not that hard to do if you know your way around Wall Street. Short selling is essentially, it's sort of like, why do we have options? Well, you want to be able to make a price, make a market in something without having to have physical ownership of it or take physical possession. And so short selling, as long as you've been kosher and borrowed the stock and they're playing by the rules, I think that's okay. Now, Frank pointed out the short interest in GameStop had 50 million shares outstanding, and I think there was 65 million short. So how do you, if you got 50 million
Right.
outstanding, so there's a lot going on there that is way outside the rules. So, I think in the short run, in the small quantity, short selling really is very good, but this one got really out of hand. And, but it's not like the what Melvin guy is, I think he lost what, $3 billion. And he was, he went from 12 billion to 8 billion on his hedge fund. I mean, he's still got 8 billion left, so he's not that unhappy, but
Well, then there was another 3 billion that he owes back to Citadel, where they helped him, stay liquid.
well, and also he traded away a lot of the revenue of his firm to get that money from Citadel. I mean, these guys don't give you the money. They cut a deal, and I think he cut a tough deal with Citadel. I don't know the details.
So in your mind, what's the long play here? What ideally, in Bill Walton's mind, how does this play out to where it helps us all, helps our 401k? Because really, that's all we care about. I want to know that my 401k is going to be good in 10 years, 15 years.
Well, I think the thing that's happening here is that there's a lot of transparency when you look into what's happening with Reddit and the Wall Street Bets group. I mean, you can see their thinking, they're talking with each other. They're totally transparent in terms of how they're looking at the trade. On the other side of it, if you look at the hedge funds, they don't disclose anything. And, if you're running a public company, which I had the privilege to do for 14 years, you're going to have to report everything you know about that company every 90 days because of the quarterly disclosure. So there's lots of transparency there. And so one of the good possible outcomes here is they're going to be forcing more disclosure of what hedge fund positions are, and with and more closer look at naked short selling, which has been a problem for 30 years, and it still is a problem and needs to be looked at again. But it's the risk here is that we get the same reaction with Elizabeth Warren calling for more regulation. I think AOC actually was on the side of the Reddit people, and then when she found out that Ted Cruz agreed with her,
Right.
she changed her mind and then accused Ted of trying to murder her. Maybe that was before or after.
A little bit of a drama queen.
Yeah.
Yeah, I think that was I think some spat they got into like a week or two ago or something like that.
But the funny thing is that the thing you know about the markets is they change so quickly, because even as we're sitting here in February 2nd, and I'm going to give it a date because it matters to the story, is that GameStop was at $380 last week.
Yeah, it's 225 now.
It closed the week at 325.
No, I think it's traded down below that. I think it was down 35% this morning, wasn't it?
Yeah, it got crushed again this morning, but I think it opened at 225 or something.
The current trading price right now is 118 on GameStop.
It's down almost 60%,
Wow.
70%
Wow.
from when
From its high.
yeah.
But is it still up from where it was before all this started?
Oh,
Well,
yeah.
it started, it was
Still up.
$7.
Right. There you go.
And the argument people have, well, this is, this price has moved way beyond the fundamental value of the company. And the issue with that is you never really know what the fundamental value of a company is. And it's sort of who's to say. That's why you have a market. And the other thing, we're back onto the hedge funds, is a huge percentage of hedge funds trade just on momentum. They don't care what the underlying asset is. All they want to know is what direction is it moving, how quickly is it moving, and how they can get a position in order to make some money. And they're willing to make money, pennies on vast, on huge piles of capital, because it adds up. So the people that have criticized the Reddit people, saying, well, they're bidding it up way beyond the fundamental value of the company, they knew that. I think they were playing the same momentum game the hedge funds were playing, except they were playing it long, and some of the hedge funds were playing it short.
That's a big theme of this, is that these are guys doing what gets done to us all the time.
Right.
It goes on all the
Exactly.
time. It's just different people doing it now.
So let me ask you this. Is there a possibility that internet investment groups like this end up running Wall Street? They become the hedge fund managers, they become the powerhouses on Wall Street. Guys sitting at home in their robes and pajamas who play video games all night, then they're going to run Wall Street and our economy, a big portion of our economy.
You mean they're not going to live in Greenwich Village or Greenwich, Connecticut, and
Nope.
have private estate?
They're gonna live in their mom's basement.
There might be too much. There's way too much vulgarity for classical society.
Here's the thing. It's mystifying about the hedge funds. And Ridge, you may be right. Where I'm going with this is that, hedge funds, when they were smaller, a smaller piece of the market, really did quite well. You got a lot of bright people, and they would produce returns that were 10% better than say the S&P. And that's because they had a bigger landscape to get their investment ideas from, and there were fewer players, and they had some differentiated advantages based on information. They'd hire people to do research into things that none of us much think about, so that they made more money. Good. Fast forward to the last 5 years, maybe the last 10 years, hedge funds have trailed the market by 2%. If you were in the S&P 500, you've gotten about at 9% now, maybe 10%. Based on the numbers I'm looking at. Hedge funds did 7.5%. And so you ask yourself, why are we still in hedge funds? And I'm still in some. It's because you're looking backward at how well they did, 10 years ago.
Right.
And then the other thing that's extremely annoying is that $370 million that these guys the top people are getting paid. They're getting it because they're getting 2% on their investable assets, and they're getting a 20% carry on the profits. And so compare that 2% on your hedge fund to a no-load mutual fund. I think people are going to start asking the question, why are we really paying it? So the way hedge funds, I think, have become less important as people start paying more attention to how they're actually delivering results. Now, I got to drop a footnote to this. If you take something like Renaissance Technology, which has developed an incredible algorithm to trade, they've been turning in returns 50, 60% for a couple of decades. So when I talk about the run-of-the-mill hedge fund, I'm not talking about the people that have really figured it out. But you can't get into Renaissance, and you can't get into it. I can't get into it. Maybe what ought to come out of this, maybe we've got 6 of us on the phone here. Maybe we ought to get our own little section of Reddit.
I'm in.
Not a bad idea.
What else should we talk about with this? Because it's a fascinating.
Can I ask a question about something you said a little while ago about the stock market having 50% less members or traders than it did 10 years ago or something? What's the trend there, and where does that go, and what's the danger of there not being a Wall Street someday and the implications of that?
Well, there are 4 or 5 or 6 drivers. One is that it started with Sarbanes-Oxley, I think, although it's hard to put a precise date on it. But when Sarbanes-Oxley was passed, you had your reporting requirements and the things you had to do to be public. It got a lot more expensive. And then at an earlier point in time, the small market makers, there are a lot of small brokerage firms, and we had a rule where you could get, they were charging 1/4 of a point to make a trade, or 1/8 of a point to make a trade. And then the SEC and the regulators in their wisdom said, you can only make a penny a trade. And so going from getting that bigger amount to just a penny and then even less, making a market in small cap stocks wasn't a good business anymore. So it was expensive to be public. Nobody wanted to make a market in your stocks. And then the other thing that happened, as I pointed out, is it's a tough world out there. It's a predatory world. You got to produce results, and that's where the hedge funds made it very rough on these smaller companies. You miss a quarter, and they'll take you all the way out, and you just don't want to be public. And so that's the negative. Then the positive in terms of where these companies go is you got the rise of the venture capital industry, and a lot of the big companies a lot of big tech companies that used to go public like right away, like Microsoft did. Microsoft went public, I don't know, at some low valuation, like $100 million or $50 million, something like that,
Wow.
which in that world is small, which meant that the public investors got a big ride on the future growth of Microsoft. By contrast, and I think they went public within about 3 or 4 years. I'm fuzzy. I'm not precise about these numbers, but Facebook, they waited 8 years to go public, and the venture funds that had the big investments made most of the money in that. And then Facebook goes public, and the public investors only get to play at a much, much higher valuation. I was looking at something, some people say this might dwindle down to the only thing left are the huge S&P 500 companies. And you've got kind of a feeding system where
Right.
go from private equity or venture capital, and they get big there, and then they go public only after they've taken most of the profitability away from it. I don't know, but that seems to be where it's going.
But it doesn't, though. I mean, aren't we always predicting that the big are going to eat the small, only to find out that the small find a way to survive?
Well, that's I think the lesson here is that if you look at what's happening with these small traders and with the markets that are being made here and the information that they're sharing with each other, I think it's possible that we can end up with a resurgence of smaller companies with these smaller groups of investors, assuming the regulators let it happen.
Well, so here's a good stat. So the DART, the daily active retail traders. So people, individuals. In 2019, it was about 10% of all the daily stock market activity. In December of 2020, that number is up to 25%. So it's like you've got more individual, investors now more than ever. And I think as you see more and more, like the barrier to entry in terms of zero commissions across the board. I remember when I started on TD Ameritrade, like just to make one trade in like 2007, you'd have to spend $6.25, and that was on a discount. So you really had to think about what you were doing, especially if you had a small amount of money. But now it's you can if you don't have enough money to buy Tesla, you can buy 1/800th of a share in Tesla if you really wanted to.
Right.
And
right.
I think you're going to see a lot more of this momentum and things like that going back and forth. As people say, I can actually get into this, and it's not this big scary thing. That because everyone always says, oh, you're going to lose your shirt, it's terrifying, it's scary, it's all this kind of good stuff. Give your money to the bank because they know how to handle it better. And I think a lot of people are starting to realize that you don't have to be as smart as everyone thinks you got to be to at least say, hey, I want to participate.
And the guys on Wall Street are not that much smarter. I mean, maybe they're not even smarter at all.
I think we got that proven this past week.
I honestly think fundamentally there will have to be a change. Kind of going back to GameStop and the amount of short positions that they had, Melvin, that is, had is, and correct me if I'm wrong, but the only way that massive of a position would work is if no one would know about it for as long as possible. And we're talking about a group of people who grew up on going to GameStop and choosing their games, and whether it's Pokemon or whether it's other more shooter games, it doesn't matter. They grew up on it. And now all these guys are in their 20s and 30s, and they're online 24/7 consuming massive amounts of information, partially because of COVID, but partially because that's who they are, because that's where they feel the most comfortable. That's their home. So they sit there and they find all these things, and that information is public. So they just went for, you only live once, and let's fix this part. And this is, for them, it was very unfair and something that they felt like needs to be fixing, and they went for it. So I honestly believe that this is a first situation of many coming up because of how abundant the information is and how easy it is to find now.
I so agree. When I ran my public company, I had a duel with the short seller, and boy, I wish I had read it then, because the problem was you didn't have any way to develop a constituency on the other side of the argument. And if we could achieve one thing out of this, I would say that word's transparency. And so now you've got millions of people that are beginning to trade in this, and they've got information, but yet you've got this class of investors, the hedge funds, who have no transparency at all. And so there would be a real populist, maybe that's the wrong word, but a real demand for transparency for everybody in the market. And if everybody's got the same transparency, level playing fields, a better market, more people can participate and feel like they're getting a fair shake.
I think a lot of, what's getting argued now is that, what these people did was wrong. What they did to the institutional investors was wrong. And it's like, it's not, there's no wrong. You know what I mean? It's
these guys, the institutional investors can take care of themselves.
That's right. Yeah.
And
the amount of people who are like crying for them and trying to protect their rights and plant the flag.
Well, here's the other thing is in the journalism business and the financial news business, CNBC, Wall Street Journal, New York Times, Bloomberg, whatever, they trade in information. And what the hedge fund world does very effectively is they feed these guys information and stuff about this company or this story or this CEO. And so they develop tremendously strong relationships with the reporters and the on-air people. And so when you watch CNBC, you can kind of watch them react to who they're really hearing from. And who they're hearing from are the big institutions and the hedge funds.
Well, and you see that, on Monday, all of the news agencies were sitting there saying, Reddit's targeting silver now. Reddit's going, big into silver, and, that's the next big hype train and everything like that. And then if you read Reddit, literally everyone on Reddit saying, we're not saying anything about silver. We don't have enough money to move that market. We don't have anything like that. And in fact, Citadel Capital is the fourth largest shareholder of silver. This is not something that we're doing. We're only doing GameStop and AMC. Anything else is bots and fraudulent and not endorsed by us. Not that they're endorsing anything anyway, but not one of the plays that they're making.
Okay, well, to be continued. This saga is not going to end today. It's going to go on for a while, and there's a lot more that we could be able to get into. Any other last thoughts anybody wants to? Well, if not, thanks everybody for listening. I'd love to hear what you think. Let us know on Twitter and Facebook, where you can find The Bill Walton Show. And for previous episodes, you can also find us on Apple Podcasts, Spotify, YouTube, and of course at thebillwaltonshow.com, where I hope you will subscribe to the show. I hope you enjoyed the conversation. Want more? Click the subscribe button or head over to thebillwaltonshow.com to choose from over 100 episodes. You can also learn more about our guest on our Interesting People page. And send us your comments. We read every one, and your thoughts help us guide the show. If it's easier for you to listen, check out our podcast page and subscribe there. In return, we'll keep you informed about what's true, what's right, and what's next. Thanks for joining.